Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Happy Easter to everyone out there. I wanted to just do kind of a recap of the three outstanding recommendations I have currently. I haven't talked to you in a few days. So with that, let's get into it. MSOS, the U.S. Cannabis ETF, was my first recommendation, and nothing has changed here. We're still intact. Everything is intact. We have our stop down at $8. The current price is 10.01. It had a good week last week, up 4.05 on the week. Again, we are looking for a $13 price projection. And I think I mentioned on the last call, which was 4 or 5 days ago, on the cannabis ETF, is what I do, and it's just a suggestion, is when you get a big up day, if the ETF is up 5, 7, 8% in a day, 15% in a day, you sell a little bit. So if you have 100 shares, maybe you sell 5, maybe you sell 10, whatever your risk tolerances. And then when you get a down day of 3 or 4% or something, I buy those shares back. It's just kind of a risk management tool, and I thought I would throw that out for you. Again, we're looking for $13. It could be greater than that, but 13 is our target based on the compression of our triangle pattern, which gave me the buy recommendation at the beginning. So really, that's where we're at on MSOS, expecting higher prices. This is just a close-up. So let's go back. We're just going to look at this. And here we are. We got our bullish channel. Here's our two horizontal upward sloping trend lines. And you can see where I've placed the stop. You know, if it breaks that area, it's broken out of our bullish channel, etc. So it's just a close-up of what we just looked at. All right, I want to go to the next, the second recommendation I gave, and that was on the iShares China Large Cap ETF, symbol FXI. And as I mentioned, we're bottom fishing here. We're looking at the Shanghai index, which has been in a downtrend for several years. And you can see that's reflected in the ETF. Here's our bearish channel, and prices are going down, down, down. And as I spoke about when I made the recommendation, this is where I saw some interest when we got a 5-wave advance. According to the Elliott wave theory, that means the trend is up at this point in time. And you can see we had a 3-wave decline, but it hasn't, it's still above the low of our 5-wave advance back in November of 2022. So we're back up, getting close to challenging the resistance level of this bullish channel. A couple of things, if this is correct, with a 1-wave up, a 2-wave, a wave 2 decline, we should be entering the 3rd wave. And 3rd waves are the largest and the most explosive. So I don't want to miss this. And you can see my small wave count here. If this is the 3rd wave up, within that 3rd wave, we have a small 1 and a 2, meaning that we should be entering a 1/3 of a 1/3. And we'll see by when the index is up, it should be up in a big way. So that's something we want to monitor. Now we're going to just look at what got me involved. I've been watching this, but not involved. But what got me involved in suggesting a buy recommendation on the ETF, we're going to look at this small area over here. And we have our bullish pattern here, that pattern recognition that is a inverse head and shoulders pattern, left shoulder, the head, the right shoulder, a breakout, and then a retest of that breakout. As long as it stays above the right shoulder, we're okay. So I have my stop down at 23, and just on this small pattern, our suggested uh, price projection is 27.50. So again, here's our first wave up, our second wave correction. There's a possibility we get another little down jog before we go up, but I think the setup is nice. I think the reward to risk is very favorable. So nothing has changed here either. And the third recommendation that I made a few days ago was the United States Copper Fund ETF, symbol CPER. And, we don't, you don't, I don't buy copper futures. You have time elements and all kinds of complexities. I think this is a volatile enough ETF that you don't need all that. And the upward potential is pretty large here. And here's our symmetrical triangle, the consolidation for a year and a half, and the explosive breakout a couple of weeks ago on really good volume, which is always good to see. And now a little bit of a pullback on lesser volume, which we like to see. And last week we had prices started the week at the high of the price range for the week. Interweek, it dipped down to one of the support lines and ended back up towards the top of that weekly price range, and it gave us what we call a bullish hammer. It's small, it's not huge, but it's still a bullish hammer. It shows good price action, and our potential upside is $32 or about 28% potential upside here. Could be greater. And our downside is our stop at 23.50, which is about 6% on the downside. So our reward to risk is 4.5 to 1. And I think that is very attractive. One concern I have going into the week is we do have a negative divergence on the overall S&P 500. And so you can see as prices have been hitting higher highs since December, you can see on our RSI, our relative strength index, which measures the underlying oomph of the move or of the intensity of the move, and you can see that it's waning. That's flashing a caution sign that a change of trend could be coming or some sort of pullback or correction. So this has my eye, and the things that I'm choosing, the cannabis ETF, the Chinese large cap ETF, and copper have a low correlation to the overall stock market, meaning that they don't follow it exactly. And so even if we get a correction, I'm hopeful that the ETFs that I recommended uh, will uh, will weather the storm. And with that, thank you for watching. Please like and subscribe. Thanks for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I'll probably have a new recommendation later today. And really, I hope you and your families have a great Easter. Have a great day.